Wall Street closes mixed on Wednesday. The Nasdaq and the S&P 500 close with losses, while the Dow extends its winning streak for the 6th straight day. Asian markets open mixed ahead of the release of the Chinese trade data for April. The GIFT Nifty is also indicating a flat start for our own markets. Crude prices tick higher, with Brent crude trading around $83 a barrel as US crude stockpiles report a drop. LNT delivers a steady fourth quarter and beats guidance on revenue growth and order inflow for FY24. The company also guides for 10% order inflow growth in FY25, but its margin guidance of 8.25% underwhelms. And in key numbers to track today, net interest margins is likely to be under pressure for State Bank of India, while volume growth and the impact of higher competition will be the key to track for Asian Paints. It's Thursday morning, it's an earnings heavy day, and we are here to bring you everything that you need to know on Power Breakfast this morning on CNBC-TV18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets have opened. It's been a subdued start across the Asia Pacific. The Japanese and the Korean markets are trading flat, as is the Taiwanese index. The Hang Seng is also up 0.4%. The South Korean index, though, the Kospi, is retreating a bit from the highest levels in a month that it had seen just a couple of days ago. So it's a subdued start for the Asian market. Some trade data from China is expected any time now for the month of April, so all eyes will be on that as well. We'll pull up the GIFT Nifty, and that is indicating another flat start for our own markets, absolutely flat. And just like yesterday's session where the Nifty ended absolutely flat, 0 points move, it was just the 5th time in 2 decades when that happened for the Nifty. So we'll keep an eye out on all of these cues. But from Asia, we move across to Wall Street, and that was also a flat trading session on Wednesday, but a mixed one. The Dow climbed 170 points to extend its winning streak to 6 days. The S&P 500 ended flat with a mild negative bias, while the Nasdaq also shed nearly 30 points. Now, shares of EV automaker Tesla slipped after reports stating that US prosecutors were looking to whether the company committed a wire fraud as part of a probe into Tesla's autopilot systems. Meanwhile, as investors digest a slew of Fed commentary, Boston Fed President Susan Collins has said that the central bank's interest rate policy will need to remain at its current levels until inflation is moving sustainably towards the 2% target. And staying with the US markets, let's also listen into some important voices on the outlook for the US economy and the next decision from the US Federal Reserve.
We're closer to the top of rate hikes than we are, so we know that we're going into a cutting cycle. We can be directionally correct on that. We know that right now, for almost every investor, there's a risk-adjusted portfolio that has a fantastic setup, whether it's 5% bond yields, it's dividend-oriented stocks, it's staples and growth stocks, actually having an equal opportunity to outperform in the market that we're in, and those are the thematics that we're leaning into.
We don't need Fed cuts. We need to believe that we're at the start of a multi-year easing cycle. Okay. What we also need is the economy is not strong. It's just stronger than what most people expected. It's around 2.25, maybe 2.5. That's fine. That's great for actually large cap stocks. As far as what we need is we need credit spreads to stay where they are. We need the fundamentals to continue to fill in. And we need that a little less volatility in the rate market and the belief that, okay, we're not going to see 5 again, or we're not going to see 5 for a sustained period of time. You have that, you can get about 5,500 without too much trouble.
And let's now get to the final update in our global market wrap this morning. European equities ended Wednesday's trading session higher, with the French CAC up about 56 points, the German DAX gaining around 68 points, while the British FTSE closed at yet another record high with gains of 40 points. In important cues to track from the region, the Bank of England will announce its rate decision later today and is widely expected to keep rates on hold for the 6th consecutive meeting at 5.25%. Investors will continue to watch for any hint from the BOE MPC or the Governor Bailey on a possible rate cut in the month of June. So important cues coming in there from Europe later this evening. But that's the global market action. How will these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in news. First up, Vivek joins in to get all the market cues that you need to watch out for today. Vivek, good morning. It's been absolutely flat the last couple of days. What are you picking up?
Well, good morning. So if you had missed yesterday, you'd probably feel that, the Nifty hasn't gone anywhere because the Nifty absolutely closed flat line. Now, when you're talking about overnight Qs, continue to remain quite supportive, quite mixed as far as the US was concerned. But the Dow managed to go ahead and post the sixth straight winning streak as far as the entire market was concerned. Now, talking about oil prices, something that, like we mentioned yesterday, oil prices have cooled up quite significantly. In fact, in the week gone by, it was down almost 10%, and yesterday that helped the rally as far as the OMCs was concerned. WTI futures, Brent futures now hovering around the $79 and $84 a barrel mark respectively. Now coming to the Indian markets, like we said, volatile, choppy trading session, but the Nifty ended near the flat line. The broader market outperformance was something that we saw in yesterday's trading session. What did extremely well in the session yesterday? It was the auto pack, especially the auto ancillary pack. Bharat Forge results, stock up almost 15%. Hero Motor 2 towards the end of the trading session declared its results. That also did quite well. On the other hand, you also saw OMCs do quite well, but it was the private banks, that was the big drag. So HDFC Bank, ICICI Bank, they were the ones that did see some amount of pressure coming about. Now, talking about results reaction, yesterday post-market hours, extremely heavy day in terms of the number of results that did come through. So LNT, TVS Motor, Tata Power Pyramid, just to name a few, that will react to the results that they declared post-market hours yesterday. Today, SBI will be declaring results. All eyes will be on that, and that will give further direction as to how exactly the PSU banking pack will move. Asian Paints, PNB2, GIFT Nifty indicating a mildly positive start for our own markets.
It's an earnings heavy day. Thanks a lot, Vivek, for joining in and listing out all the market cues to watch out for. Over to Sudarshan now, who would list out the stocks that you need to watch out for. Sudarshan, good morning.
Morning, Homa. So first, I'll start with LNT, which has reported earnings. Margin has missed estimates and the guidance. Order book is well above guidance. It's up 30% year-on-year. Revenue is up 15% and margin has slipped 50 bips year-on-year. For FY25, company says order inflow growth is seen at 10% and revenue growth is seen at 15%. TVS Motor earnings are above estimates. Company has reported margin above 11% for third straight quarter. Revenue is up 24% and margin has risen 100 bips year-on-year. Company says EBITDA journey will continue to improve quarter after quarter, and this year will be launching three-wheeler electric vehicle. Tata Power earnings are largely in line. Revenue is up 27%. Margin has fallen 70 bips year-on-year, and contribution of coal profits has dipped versus core business. Piramal Enterprises mixed Q4. NI is flat Q-on-Q but up 36% year-on-year. Net interest margin has come in at 6.8%, which is down 50 bips sequentially, but asset quality is stable. Gross NPA is unchanged at 2.4%. Sula Vineyards operating numbers have fallen year-on-year. Profit is down 4%. Margin has slipped 310 bips. BSE higher expenses have dragged margin. Operating expenses have risen 40% and margin has fallen 500 bips sequentially. Keep an eye on Muthoot Finance and Manappuram Finance. Sources say RBI has sent advisory to NBFCs on loan cash disbursal. RBI tells NBFCs to strictly adhere to Income Tax Act provision on cash disbursement, and NBFCs should not disburse loan amount in excess of rupees 20,000 in cash. So keep an eye on these two stocks.
We'll keep an eye out on this RBI notice to the NBFCs as the show goes by. But thanks a lot, Sudarshan, for joining in. And lastly, Nigel is here with cues from the FNO space. Nigel, the Nifty did not move yesterday, but it's the options expiry today. What are you tracking?
Well, that's right. Hormuz, when the markets don't move and the Nifty doesn't move, the option writers had a blast yesterday because, on both sides you made money if you wrote calls as well as puts. And it seems the S&P 500 as well took a cue because that one as well ended as flat as can be overnight. What did the FIs do? Well, in yesterday's trading session, they unwound some longs, 11,000 contracts odd, and they added 15,000 short contracts, which is a swing factor from 26,000 contracts. And that's why if you look at it, if you just pull up the chart, you'll see just 5 sessions ago, they were net long. Now they're net short with closer to 91,000 contracts on the short side. So a net short market is something that you like. In the past, we have also seen 1.5 lakh contracts. But normally when you see around 1 lakh contracts or you get a bit of a bounce, though now we have a big verdict, which is the election verdict that's ahead of us. So we'll have to keep an eye out on that. What about the options data? 22,400 call, that was fairly active, and 22,300 put, that was fairly active. And the premium I've given is the comparison with the start of the trading session. So the premium came down for calls, came down for puts as well. So just plugging in those numbers, you're getting a broad range that comes up for you on the screen. On the downside, 22,185, which is in fact yesterday's low. And on the upside, 22,450. Remember, today's weekly expiry, so that's going to be important as well. The levels come up for you on the screen. The Nifty Bank, important level out there, the 20 DMA, that's 300 points away from where it closed. So you like to see that taken out on the upside. Well, on the downside, you don't want the 50 DMA to get taken out. Stocks that are tracking, we have two stocks, Canara Bank as well as PEL, that's Pyramid Enterprises, that came out, went into the F&O ban. So we'll keep an eye out on both these two. Back to you.
50 DMA, the level to watch out for the Nifty. Thanks a lot, Nigel, for joining in. And time for a short break here on Power Breakfast. When we return, two very important index names, the LNT and SBI, will be in focus today. One after its fourth quarter earnings and one ahead of its numbers. We'll get you more details on the other side. Stay tuned. Back with us here on Power Breakfast, and let's focus on some important earnings now. LNT reported a good set of fourth quarter results. Vivek is now joining in to get us up to speed with the numbers, the guidance and much more. Vivek, over to you.
Well, good morning. So LNT, the large cap as far as the entire capital goods space is concerned, declared its results. All eyes were, by how much the FY24 given guidance could be beaten by the management and what would be the guidance as far as FY25 is concerned. We'll also have a look at how Q4 panned out. So Q4 largely in line with the poll. In fact, a slight beat, you could call it. Revenues coming in at 67,078 crores versus our poll of close to 66,280 crore. EBITDA too coming in over the 7,200 crore mark. Margins at 10.8%, the only miss, and profitability coming in at 4,396 crore. Now talking about the order book and the guidance that the company has given as far as FY24 as well as FY25 is concerned, the order book now stands at 4.75 lakh crore, up significantly, up almost 20% on a year-on-year basis. Order inflows at 3.02 lakh crore, up 31% on a year-on-year basis. This is well above what the management had indicated. The management had indicated an order book growth of around 20% in the year gone by. Now, talking about the revenue growth in FY24, revenue growth of over 20%. The guidance band that the company had was in high teens, that is 12 to 15%. They expected to beat that, but again, the beat over there has been quite significant. However, the core EBITDA margin that the company had given was in the range of 8.25 to 8.5, which in itself was a contraction from the earlier 8.5 to 9% band. Now, in the year gone by, the margins have come in at close to 8.2%, so miss over there. Now, talking about FY25, the significant underwhelming guidance that the management has given is the core margin guidance. The core margin is expected to be around 8.25% flat versus FY24, and this is something that the street will not like. But apart from that, order prospects, order book guidance, revenue guidance, all are quite strong.
Yeah. See, on top line, since we have had a very large base of orders of almost 3 lakh crore, and considering that maybe 4 or 5 months we might lose out in the government formation, new government, all of that political issues, we have assessed a growth of around 10% in terms of fresh order intake for the FY25. But looking at our order book of 4.75 trillion, we do think that the revenue growth would be around 15% or thereabouts. We do think that the margins that we will report on 15% revenue growth for the core businesses would be around the current levels, which is 8.25 thereabouts.
The management there of LNT sharing its guidance for FY25. Moving on now, banking major State Bank of India will report its fourth quarter results today. Abhishek is joining in with the key expectations. Abhishek, good morning.
Good morning, Omar. So, our polls suggest NII growth could be on the weaker side for State Bank of India. Key things to watch out is deposit growth will be lower than system. So, it will be around 10.8% YOY and 3.1% quarter-on-quarter as per Motilal Oswal. Advances growth to remain healthy. Again, Motilal Oswal estimates 14% growth YOY and about 3.7% growth sequentially. Net interest margin can come under pressure both YOY and quarter-on-quarter. Morgan Stanley estimates net interest margin decline of 16 basis basis point YOY, while Kotak Securities estimates 10 basis point decline on a sequential basis. Now, OPEX will remain high, which can impact the operating profits. Final wage revision settlement, they'll have to make provision over there. Slippage is expected to remain stable. Morgan Stanley estimates a slippage of 5,000 crore, which compares to about 5,046 crore in the previous quarter. Recovery and upgrades will be on the lower side. That is what Kotak Securities is saying. Asset quality largely expected to remain stable or improve. Again, Motilal Oswal estimates a gross NPA ratio to decline by around 10 basis points sequentially, while net NPA ratio can be flat. Now, management commentary with respect to growth, unsecured loan, net interest margin, as well as the outlook going ahead will be seen closely. Our polls suggest NII growth of just 1.2% YOY and about 2.7% sequentially. We are working with a profit decline of 21.5% YOY and a growth of 42.8% on a sequential basis. Back to you.
Thanks a lot, Abhishek, for joining in. We'll keep an eye out on SBI as the numbers come later in the day. But moving on now, sources tell CNBC-TV18 that the Reserve Bank of India has written to NBFCs to strictly adhere to the RBI guidelines on cash disbursals. Ritu is here with more. Ritu, good morning. What do you have for us?
Good morning, Hormaz. You know, the Reserve Bank of India has issued what is an advisory of sorts to NBFCs, largely the gold loan NBFCs that have a presence in Kerala specifically, to strictly adhere to the Income Tax Act provision on the cash disbursement of loans. Now, we've seen a copy of this letter where RBI has plainly cautioned that no NBFC should disburse loans in excess of 20,000 in cash, citing that Section 269 of the Income Tax Act, which deals with this particular provision. Now, the letter has not really come out of the blue at all. If you recall, RBI recently took action against IIFL Finance for its gold loan business, where, among other reasons, the breach of cash dispersal limits for gold loans was cited as one of the issues by the regulator. Now, we understand that since that, several large players in the gold loan business have reached out to the Reserve Bank of India to ask whether that 20,000 limit had to be strictly adhered to. And it is in response to that RBI's Department of Supervision has issued this letter to NBFCs, including the likes of your Manappuram Finance, Muthoot Finance, etc., asking them to adhere to the limit. Now, even RBI's master directions on scale-based regulation for NBFCs are very clear that they must adhere to the IT Act rules in the matter. So this was plain and simple as far as RBI was concerned. But despite this, our understanding is that many large players have been flouting these norms even after RBI's action on IIFL Finance. So this is to serve as a warning of sorts that the law of the land, in this case the income tax rules on cash dispersal, must be adhered to with no exceptions.
Thanks a lot, Ritu, for all these updates. Time for a short break. Now, up next, we get you cues from the commodity space. Stay tuned. We'll be right back. Welcome back. You're watching Power Breakfast, and as promised, Manisha Gupta now joins in with all the updates from the commodities market. Manisha, good morning. What are you picking up?
Morning, Hormaz. Thank you for that. Well, I'm looking at the metal prices first of all, because overnight there has been a bit of a profit taking. So when you look at copper, we've seen a percentage point of decline. Aluminum prices are off their 2-year highs, and there is some damage that we've seen happen for silver. Even steel, for that matter, continues to be on the declining path. The reason is that the markets will now watch out for the U.S. data. You have the jobless claims coming in and the consumer confidence numbers as well that come in between today and tomorrow. So before we hit the weekend, we will be looking at a couple of these important numbers. Also, when you look at the U.S. Fed futures, there is now just about a 56% probability of a rate cut coming in for the month of September. So the street really seems to be working with the fact that you will be looking at rate cuts even beyond the second quarter now. I look on the crude oil prices also, and we did see the prices go down to 82, but we're trading above 83 at this point in time. The U.S. crude inventories draw is something that has been supportive. The street also is watching cues from China. The Israel-Hamas ceasefire also seems to be in focus. So there's various stuff that is happening, and the crude price is trading within range because of that.
Profit booking seen in a lot of the commodities. Thanks a lot, Manisha, for joining in this morning. But with that, it's a wrap on this edition of Power Breakfast. Bazaar Morning Call comes up next from me and the team that put this show together. Thank you so much for watching.